I mean, I guess when I'm thinking back to experiences in my life that sort of felt like this, but not really. I guess like my wedding day, I was like, I was happy, but I didn't really know what was going on, and like it was like I wasn't really in my own head. I was somewhere above it, and I knew what was happening, but I didn't know what was happening. And I knew that this would change my life forever, but I didn't know where it was gonna go.
Right.
So it's kind of a similar feeling, but it's not as happy. It's more like a lot more apprehension. I haven't been feeling happy about this.
Right.
I didn't think I ever would be. And then again, like this still is nothing because the world is still functioning. The gold to silver ratio is like 45 now, which is, it's pretty low, but that's only from the last few years. I mean, it can get all the way down to 15 or 20. And so, well, like the calculation in my head is like, well, assuming we're right about everything, assuming that the dollar really is going to collapse and all purchasing power is going to go into gold and silver, what what am I supposed to do with that?
Many investors still misunderstand what rising precious metal prices represent. This movement is not about multiplying dollar wealth, it is about the dollar itself losing credibility. When gold and silver rise sharply, it means paper money is weakening in real terms. In a true monetary reset, assets denominated in fiat, including many derivatives, may fail to function as expected. Physical metal plays a different role. It is not a trade, but an insurance policy. The distinction between speculation and divestment becomes critical here. One seeks gains, the other seeks survival when pricing mechanisms begin to fracture.
I don't think we're in the end game until the next printing round begins, until there's another banking crisis, and then the Fed moves from wherever we are. We're still at like five. Where are we? 4% interest rates. What's the Fed funds rate now? I don't even
I
remember.
think it's around
Like
4%.
so it's around four. When they go back to zero and then they print $5 trillion in a week, then we'll be in the end game. And then what we're seeing now is will be like a nice breeze on a warm day.
Yeah.
You know, the, okay, so 100, 150 and 100. Where are we now? So we're somewhere between 110 and 120. I don't know. I mean, because I haven't looked in the past 5 minutes, so you could be anywhere. But there's really nothing big going on in the world right now other than precious metals are moving. But when precious metals are moving, that means that everything else is going down in terms of money. Because what a lot of silver stackers and gold stackers still don't understand is that this isn't about increasing dollar holdings with a metal. It's about the dollar going down entirely and then everything being denominated in terms of that metal that you stack. And
Right.
that's not gonna work for ETF hoarders or for any other kind of gold or silver derivative. I'm not that I'm against buying silver derivatives or anything like that. I own silver derivatives, but this is what do you call it? Separating the men from the boys, or what would be the equivalent of separating the stackers from the investors. I mean, those who invest in gold and silver and those who are divesting with gold and silver. And this sounds like an academic point, but it's not really an academic point because the end game is coming. There's going to be a point where the dollar's not going to work at all. And
Hmm.
when it does, the silver derivatives are not going to work at all either. You're not going to be able to get anything with them. And we're going to be in the end game. Now the question is that now or is it later? I still think it's later. I still think we have a little bit of time before the end comes. But the end's gonna come, and when it does, I don't see the other ones turning around so much. I mean, the ones who believe that okay, they like silver, they like gold, but they think it's in a bubble now, and there's going to be a correction. I'm not saying there isn't going to be a correction. There's going to be a correction, but what I'm saying is that after the final correction, that's going to be it,
Right.
right? I can see it I can see it coming up. I can see there's going to be a banking crisis, and then all those industrial interests that are buying silver now for 110, 115, $120, they're going to have a lot of extra silver that they're buying now out of some kind of a panic because they think it's not going to be available, which is why they're buying it now. And then they're going to have their debts to pay, which are still dollar denominated. They're going to have to sell some of their silver for dollars in a dollar crunch pay that debt, and silver's going to go
Right.
down.
Yeah.
The thing is, I can't. There are three questions I can't answer. When is it going to start to go down? From where is it going to start to go down? And to where is it going to start to go down? I don't have any clue.
What makes this rally unusual is its timing. Historically, explosive silver moves followed major crises, aggressive money printing, banking collapses, or runaway inflation. None of that is fully materialized yet. Interest rates remain elevated, consumer systems still operate, and shortages have not reached the public. And yet silver is surging. That raises a troubling question. If metals are moving this aggressively during relative calm, what happens when real stress arrives? Past cycles suggest later stages become exponential. This early acceleration hints that markets may be front-running events that have not yet unfolded, and that surprises could arrive fast.
What's weird? Is anything happening that's weird?
Or
Well,
concerning you.
so I wasn't expecting this kind of move in silver until there was another printing round.
Yeah.
And the fact that, okay, you could argue that it started because QE started like a month ago and they're printing $40 billion and for bills, but this is really just at the bottom of the monetary structure, you could call it. But
Right.
there's no mass bailouts yet. There's nothing big really happening, and yet we have this huge move in silver. In 1980, there was price inflation, or consumer prices were rising at like a 10 to 15% clip. And now, and you could say that the CPI isn't honest, fine, but it's not at 10 or 15% like it was in 1980. We're not there. We're not in any kind of hyperinflationary moment here. We're in a sort of purgatory where people are starting to realize that, yeah, the dollar is not really going to last so much,
Right.
but there's no lines at supermarkets hoarding food or hardware stores, or there's no flight to real goods yet. So I wasn't expecting this kind of move until that happens. So what's concerning me, I would say, is that if this is happening now, when nothing really big is happening, what's going to happen when something big really is happening?
Right. No, no, that's a fair question, and I think it'll be even more parabolic than the moves we're seeing now, which is crazy to think. What are your thoughts, Rafi, on, a lot of people are talking online about, the Shanghai prices or the actual physical prices in the East are like 120 or $125. It's a $13 to $15 spread compared to what we're seeing now in the paper markets here in the West and in the COMEX, and then in the physical, it's a different price. It's higher. Why do you think there's that difference? Is it due to a shortage? What does it do? Like why is that happening?
I don't know. I'm gonna guess, and I could be wrong. Thing is, I've always had a disclaimer that I'm not a silver industry expert, right? I'm
Right,
a monetary guy,
right.
so I can guess. If I look at the first of all the physical prices for silver, junk silver, for silver coins, they're at like a 3 or 4% discount to spot. Now, what's the difference between spot silver that you can get in a contract and coins that you can get? Well, coins are for people who are banking on monetary demand, and they think that we're gonna have to use coins in the future to buy food, right? But
Hmm.
people who buy contracts, if they really want the stuff, then they need it for whatever industrial application they're making solar panels, or they're making whatever it is that they make with silver. They can't just buy rolls of dimes and then purify them, or it's not what's the word isn't purify, it's or melt them down, or
Right.
what's the word? It's really annoying me that I don't remember the word.
Mint them? No, not mint them.
No, no, no. Whatever. Purify it from 90% to 100% in order to use in some kind of solar power, or whatever industrial purpose it is. So that would lead to a discount in the physical price for coins, right? But in the COMEX, we still have there's still a lot of silver in the COMEX. I haven't checked the number recently. I'm guessing it's like 400 million ounces, right? And that's still a
Hmm.
record high. It's still almost a record high. The record high was like a half a billion, 500 million, but that was only a recent record high. And in London, there isn't much. And in Shanghai, there's even less. But Shanghai, that's where most of the manufacturing is, right? That's
Right.
where the trade deficits come from. So most of the silver manufacturing, where they would need silver to actually put in their capital machines to create whatever they're creating, that's happening in China. And so they would be the ones to withdraw that silver from their exchanges, and to make sure that they have it, they would pay a premium. And I'm not even sure how much. It depends what you're manufacturing or what percentage of cost, with the silver and whatever you're manufacturing, and how high would you be willing to pay for it.
Right.
So there's a big disconnect now in the American market, where silver, the refining, that's the word I
Oh,
wanted.
refining. Yeah, yeah.
The silver refiners, they're in a backlog. Uh, so that would dampen the demand for coins, because they can't take the coins and melt them down because there's so much that they still have to process. Whereas in China, there's demand to just keep stock available to keep the manufacturing going. There's really like three different markets in silver right now, and they're really starting to split apart. And
Yeah.
that's indicative of a dying market.
No market moves in a straight line. Even in a long-term monetary transition, corrections are inevitable. Industrial buyers currently paying premium prices may be forced to liquidate metal to cover dollar-denominated debts during future credit stress. That could trigger sharp, temporary declines. However, such sell-offs would not signal failure. They would mark the final cleansing phase. After that point, pricing may no longer revert meaningfully. The challenge is that timing cannot be predicted. What matters is understanding that volatility ahead does not contradict the thesis, it confirms it. The final correction tends to precede structural change.
It's not about increasing your dollar holdings.
Right.
It's about just owning some coins in case the dollar stops working. So just get your first tranche of gold or silver. You should start with silver probably, and then go to gold. And then just ignore it and don't even look at it, and try not to listen to the news too much. And then check back in like 4 or 5 months, if we can even make it that far. I don't even know. But you don't have to understand everything to get a little bit of silver. You can just get it and then worry about it later,
Right.
and keep it with you and hold it. And don't worry about SLV. Don't worry about miners so much. If you have a portfolio and you can click a button to buy silver, and your choice is you're going to get SLV or mining stocks, I would go with mining stocks, because
Right.
those have wouldn't say they have intrinsic value, but they have more closer to intrinsic value than SLV does, which could be rated at any point. So start with junk, physical silver, and then go with mining stocks, and then if you have extra capital, get some gold. You don't really need that much. You just need a little bit to get through the worst of it. That's all.
Silver is no longer a single market. Physical coins, Western paper contracts, and Eastern industrial demand are diverging. In Asia, where manufacturing depends on guaranteed supply, premiums reflect urgency rather than speculation. In contrast, Western exchanges still price abundance that may not be accessible when needed. Refining bottlenecks further distort pricing between investment silver and industrial silver. These fractures suggest a system under strain. When a market begins to fragment, it often precedes failure of unified pricing. That does not mean immediate collapse, but it signals that trust between markets is weakening, and liquidity may not be universal.
Do you remember your first silver purchase, and when was it?
Yeah, my first major silver purchase, as when I was getting coins as a divestment from the fiat system, that was with Peter Schiff, actually. Schiff
Really?
Gold. Yeah,
Oh, hey, what year was this?
2012.
2012. Wow, so that was a while ago.
Yeah. So
Wow.
I got, I think 25 or 26 an ounce, something like that. And
Wow.
it was down for like 10 years.
That's good. Yeah, I got in at 2015, and I got it for $21 Canadian was my first silver ounce. So I think it was like 17 or 18 US, something like that.
Wow.
Yeah. Yeah.
Okay.
Yeah, it was a while ago. Crazy how
Yeah.
time flies. 10 plus years now.
Yeah, and I remember I told on March 2020 during the lockdowns when silver hit, what was it, like $13 or $14 that day, and it was
Yeah.
the all-time low. Not an all-time low. It was like a major, it was a big low.
Yeah.
And I called my father and I said like, Dad, you have to just get some silver now and not worry about the price. So he's like, what should I get? So I told him to get like, a bag of junk. And he did
Nice.
it, and he did it, and he got it. I think it was like a spot price of 13, but there was a huge premium back then because everyone
Yeah.
was buying at the same time. So I think he got it for like 18 or 19.
That's pretty
And now it's
good.
like what? It's like 100, 115 now, 110, whatever. 100. Maybe it crashed to 100 during the time we've been talking. I don't know.
Preparation does not require perfect foresight, it requires simplicity. Physical silver first, then gold, held quietly without obsession over daily price moves. Mining stocks may serve as exposure for portfolios, but they are not substitutes for ownership. The goal is not to maximize returns, but to retain optionality if the system fails to price reality correctly. History shows that during resets, complexity breaks first. Those who prepared early rarely need to act in panic. You do not need large quantities, only enough to bridge uncertainty. In unstable systems, resilience beats precision every time.